Hey guys, Mubarak here of Crypto Theory and Penny Stock. Hope you're doing well. I hope you guys are enjoying the video so far, and in this one we're going to talk more about technical analysis. And more specifically, we're going to cover how to actually read the graph and analyze it to know what's important and what's not. Alright, so let's take a look at the graph. Again, I'm on coinmarketcap.com. We're checking out Ripple, which the acronym is XRP. And I want to take a look at this chart. And the funniest thing about these cryptocurrency charts, or the reason I just laughed, is because this type of acceleration in price is just so insane. And again, as I've told you guys before, I come from the penny stock world, trading stocks, dividend stocks, and these types of things are called like supernovas. And there's so much money to be made when this happens. And we're living through such a crazy time right now. You don't see this level of action in the stock markets anymore. This is happening every day in the cryptocurrency market. Let's zoom in a little closer. Whereas in the stock market, it really is not. It takes so much longer. Things are much slower. And the funny thing though is that back then, before cryptocurrencies were even popular, which is just 6 months ago, there was so much hype around the little price actions that would happen in stocks, OTC stocks, and different kind of penny stocks, but this just blows it all out of the water, and the amount of money to be made here is just incredible. So let's talk about technical analysis. I wanted to give you guys a real life example. I want to show you guys kind of how I think about it, how I look at it, and what metrics are important. So let's talk about some beginner concepts of technical analysis that any trader, you're going to hear this terminology thrown around a lot, and it's two of them. It's support and resistance. Okay, support and resistance are key metrics and key positions on this exact stock chart that you need to keep an eye on and know about to be able to make informed decisions of when to buy and when to sell. So let me get more specific, right? So the way that stocks work, right? And let's talk about the psychology, or the way an exchange works. It's one place, and people are buying and people are selling. And literally before the internet, people will go up to a counter. You guys might have seen videos or movies of, the stock exchange, and, people being on this floor of Wall Street, and, those different exchanges, and just yelling out. That's pretty much what used to happen before we had, the internet, and before we had electronic exchanges. And now the same thing is happening electronically. People are putting in buy orders and sell orders, and we're going from there. That's how all of these types of exchanges and transactions are being fulfilled, right? So if I put in a buy order of $500 worth of Ripple, right, somewhere anywhere in the world, if they have a sell order for $500 worth of Ripple that matches my price, then the order will be fulfilled, right? The transaction will occur. So all of these orders are being put in, and I want to show you guys. I'm going to show you in the exchange videos, or you might have even seen, we saw on the side the order book, where you really see live time, people putting in buy orders, people putting in sell orders. So what happens is there's points of support and resistance that are created that we can utilize to make decisions. So let me give you an example. The level of support is what you can almost think of really actually as a support bar. It supports the stock, the cryptocurrency, whatever you're looking at. It's actually a level of support. And the way you determine support all depends upon the time interval that you're looking at. So that's why it's important to go across different time intervals and really take a look at, what is a safe price for the stock or the cryptocurrency. So let me give you guys an example. You see right here at the 150 mark, you see how many times the stock comes and just touches it and then goes back up, touches it, goes back up, touches it, goes back up. How many times that happens? So in this scenario, what you can do is you can define $1.50 as the level of support, right? That is the amount that people decide all of a sudden to then buy as soon as it hits that mark, okay? And the reason for that is because they find it affordable. You're going to find around a lot of the definitive points, $1, $1.50, $2, $100. You know, the nice rounded numbers is where you can usually see a level of support. And sometimes it breaks through, right? Right here, you can see most recently it actually hit $1.50 and then it went down, right? But if something is hit 2 or 3 times, you can rely that, okay, there's probably a strong chance that if it hits 150, it'll hopefully go back up, depending on some other factors, right? But again, technical analysis is just one way of understanding the stock chart. So what you really want to know is, you know, when you look at this chart, regardless of how crazy it looks, you really want to understand where you are on the prospective market and what is safe to buy. All right, that is a support level. So we're looking at the 3-month mark. I can kind of see, look, it went all the way down here to $1.07 or even $1.02, I believe, and then it went back up, right? Even back here, it touched almost $1 and then it went back up. So I can have some level of confidence. Again, this is all statistical analysis almost. It's all a probability game, and what we're working on is coming up with research to support our decision to make a buy or sell decision. Okay? You're never going to be exact 100%. I promise you, not the best traders in the world, not the best algorithms in the world. There's no way you're going to be 100% certain, right? But there is a way for you to be statistically correct most of the time. There is a chance to increase your probability, and that's the tools that I'm giving you. That's the insight that I'm hoping to provide from this video and videos like this. All right, so that is kind of the level of support. Now let's look at another level that's important, and that's the resistance level. And that's the same general concept, but it's the highest point that a crypto will hit before it starts going back down. And that sometimes is also set at benchmarks, right? So you can see here a lot of the times around 240, it would hit and go back down. It would hit up and go back down, hit up. And now the great thing about resistance points breaking, right? When a support point breaks, you have a cause of worry, right? So 150 was the thing, and then when it went lower than 150, it's okay for you to get a little concerned. Now, that doesn't mean always sell, but that means that, okay, now you have to really understand your position. Hopefully you have other reasons why you made the trade. You know, you did fundamental analysis, which we're going to talk about in the future videos, which is really understanding, you know, the overall aspect of the company, the crypto, the news that it might be trading on, why the hype is there in the first place. But from this perspective, we're just talking about technical. So when a support line breaks, there's a higher chance of it going down and the price going down. But when a resistance point breaks, all right, when a top part of it, that every time it hits a point and goes back down, every time it hits a point, goes back down, once that breaks and the stock goes up, usually you can rely that the crypto, or the altcoin is going to go up. And that is a great concept. And I apologize if I sometimes say stock, sometimes say crypto. And the most exciting part about this for me is that it's pretty much interchangeable, right? And for you too, right? If you become well versed in this, you'll be able to make a lot of money from cryptocurrencies. You'll be able to make a lot of money from the stock market, from Forex, from options, from futures, right? All of these skills are important and transferable. There's some different laws and rules that come into play when you're looking at different kind of commodities or cryptocurrencies or stocks, but the fact of reading a chart stands true and putting these kind of psychologies, and it's really because of the way the human mind works and the exchange and the population works. As soon as a resistance point is broken, all that means is that the resistance layer that's created, let's say there was a hypothetical resistance layer at this point right here, $2, I think, and 40 cents, right? This line is 240. You can see it hit it here, went back down, hit it, hit it, hit it. So what's happening is that people are putting in sell orders at 240. So I bought it at $2, and I'm like, I want to lock in some gain. I want to make 40 cents of profit. I'm going to set this sell order for $2.40. And a lot of people end up doing that because it's just market psychology. They might look at the order book. It's just these round numbers that people tend to place these sell orders because not everyone can be in front of the computer at all times. So they'll just kind of like set it and forget it, right? So what happens though is that once the altcoin goes all the way up in price and hits this resistance layer, these orders start getting executed of selling, selling, selling. But if that layer breaks and if there's no more sell orders, then it'll shoot up and go higher. And that's the best aspect, because then the price is going to go higher. And if the volume and some other factors come into play, right, I'm going to talk about, as I talked about, there's certain catalysts that we look at. If certain other catalysts are in play, then we know that we can rely on the profitability or the fact that the altcoin is going to go up. And if we buy it at the right time, we can ride that wave up and then sell it. So I want to show you guys more examples. I want to talk about more analysis. This video was pretty heavy. You really need to watch it a few times. I would recommend really getting your head around support and resistance. There's some other patterns that I want to talk about that are familiar with all charts, and we're going to be covering that in future videos. So take it all in. This was a very good kind of comprehensive video, but it covers a lot of material that's useful to you. So watch this video again, take a small break, and then I'll see you guys in the next video. Take care.